So you're trying to cut through all the noise, right? Get a handle on complex stuff, especially, your financial future. Today, we're doing a deep dive into something pretty specific. The ForeCare fixed annuity with long-term care benefits. Our mission, really, is just to unpack how this thing works. Could it be a smart move to protect your assets and plan for care down the road?
Mm.
And we're basing this on material from Diversified Insurance Brokers.
Yeah, and it's a fascinating concept because ForeCare, well, it tries to blend annuity growth with this built-in long-term care protection. It's a fixed annuity, right? So the money grows tax deferred, which is standard. But the kicker is the Pension Protection Act. That allows you to potentially use those funds for qualified long-term care expenses without paying federal income tax on them.
Okay, hold on. Let's get really clear on that tax break because usually if you pull money from an annuity, even for care, you're taxed on the growth, aren't you? How is ForeCare getting around that?
Exactly. With traditional annuities, those withdrawal gains are typically taxable income. ForeCare is structured specifically so withdrawals for qualified long-term care, things like nursing homes, home health care, can be accessed federally tax-free. And, this often involves what's called a 1035 exchange.
Right, the 1035 exchange, I've heard of that. That lets you swap annuities without triggering taxes immediately. So if you've got an old annuity just sitting there, maybe not doing what you need it to anymore, you could potentially move it into ForeCare.
Precisely. And, well, this is where it can get really interesting from a benefits perspective. Using a 1035 exchange to fund ForeCare might actually unlock substantially more money for long-term care than the annuity itself holds. Like imagine you move, say, $150,000 from an old annuity. It grows to $200,000 in ForeCare. The actual pot of money available for long-term care could be much bigger.
Okay, you mentioned a multiplier earlier. How does that work? That sounds like the key to boosting the coverage. Think about, someone listening who really wants the nuts and bolts.
Okay, yeah, the multiplier. Some ForeCare contracts have this feature that essentially increases the total amount available specifically for qualified long-term care services. Often it's 2 or even 3 times the contract's value. So using it the same example, your $200,000 contract value could translate into potentially up to $400,000 or even $600,000 dedicated just for long-term care costs. Think of it like your base annuity value, and then this separate enhanced pool of funds just for LTC.
Got it. So this extra LTC money, it's separate from the regular cash value someone could withdraw or the death benefit. And
Right.
just to confirm, those LTC payouts are also tax-free.
That's correct. The multiplied long-term care benefit pool is distinct. And yes, when paid out for those qualified services, the benefits received are federally income tax-free. Now, there are usually monthly limits on how much can be paid out. That's important. And also, if you take non-LTC withdrawals from the annuity's value, that can reduce the total LTC benefit available.
Right, makes sense. So for someone maybe in a higher tax bracket looking ahead at potential long-term care needs, this could mean real savings compared to just liquidating a regular annuity and paying tax, right? Are there downsides or situations where maybe this 1035 exchange into ForeCare isn't the best fit?
Definitely big potential savings, yes. They sidestep the tax on the growth for those specific LTC expenses and get access to that potentially larger multiplied pool. As for downsides, well, if someone needs immediate income from their annuity now, locking it up more towards future LTC might not align. And of course, you have to look closely at the ForeCare contract itself, the fees, the specific features, the monthly payout limits, and compare it carefully to what you already have. Make sure it fits your whole financial picture, not just the LTC piece.
Okay, that makes sense. And I guess that's where diversified insurance brokers would step in, helping people figure out suitability, navigate the tax stuff with the 1035 exchange.
Exactly. That's their role, guiding people through whether it makes sense for them, the tax rules, the whole process. Really, the core idea here is converting existing, perhaps underutilized annuity dollars into potentially tax-advantaged long-term care protection, all while you still keep control over the underlying asset.
Okay, so wrapping up, the main takeaway seems to be ForeCare presents a tax-efficient way to plan for long-term care using annuity money you might already have, and potentially multiplying the funds available for that care tax-free. It's about making assets work smarter for future care needs.
Which really leaves you with a question to think about. How could a tool like this, with these specific tax advantages and the potential leverage for care costs, fit into your own long-term financial strategy? It's definitely a unique approach to consider for securing peace of mind about future care expenses.